You've seen them, right? Those little red and green bars on a stock chart that look kind of like candles. Well, it turns out they're not just random shapes. They're telling a story, a secret language of market emotion that goes back hundreds of years. So today, let's dive in and learn how to read it together.
Now, you've probably heard this 100 times on YouTube or TikTok, right? Learn these 3 simple patterns. It's a fantastic starting point for sure, but what we're going to do today is go way beyond just the basics and really uncover the incredible story these patterns are telling.
So first things first, let's just make sure we're all on the same page. We'll do a quick rundown of the what, the basic definitions of those big 3 patterns everyone's always talking about. Okay, first up is the Doji. It usually looks like a little plus sign or a cross, and the reason is simple. The price opened and closed at almost the exact same spot. It's like a perfect tug-of-war, where neither the buyers nor the sellers could gain an inch. It's a pause, a moment of pure indecision in the market.
Next, you got the hammer. You'll usually spot this one after the price has been falling. Now, that long tail at the bottom tells a really cool story. It shows that the sellers tried to push the price way down, but nope, the buyers stormed back in and drove it all the way back up. They are literally hammering out a bottom in the market.
And then we have the engulfing pattern. This one is just dramatic. It's a clear and total shift in power. You see one candle's body completely swallow the one before it. A huge green candle eating a little red one. That tells you the buyers have just completely overwhelmed the sellers. It's a hostile takeover, and it's one of the clearest signals you can find.
All right, so Doji means indecision. Hammer means buyers are fighting back. Engulfing means a total power shift. Got it. But how? I mean, really, how can these little pictures on a screen possibly tell us what's about to happen? That is the real question, isn't it?
And that, right there, brings us to the why. Because these patterns, well, they're not magic. They are a visual record of a battle. And once you learn to read the story of that battle, you'll see the market in a completely new light. This quote absolutely nails it. See, a market isn't just a bunch of numbers and algorithms. It's people. Millions of people, all making decisions. And those decisions are driven by some pretty powerful emotions.
And here's the secret. A candlestick chart is basically a mood ring for the market. It's the only tool we have that directly measures mass psychology. Think about it. That long wick on the hammer, that's the visual footprint of fear giving way to hope. That giant body on the engulfing candle, that's greed kicking caution to the curb. It's the human condition right there, told in red and green.
In this whole way of reading the market psychology, it has a history that's way deeper than you might think. This wasn't cooked up in some Wall Street office a few years ago. No. For this story, we have to go all the way back to 18th century Japan.
Yeah, this entire system started in the 1700s. There was a legendary Japanese rice trader named Muni Hisahoma. And he figured out that, yeah, supply and demand matter, but the emotions of the traders had a huge impact on the price. So he developed a system to track it, and that became the foundation for candlestick charting. And get this, for nearly 200 years, this was basically a secret of the East, until it finally made its way to the West in the late 1900s.
And Homa wasn't just some guy who did well. He was a legend. They called him the god of the markets. The stories say he pulled off over 100 winning trades in a row. This saying from back then just shows you the kind of status he had. People knew they couldn't be him, but they'd settle for being rich and powerful. That's how big he was.
And because this whole technique grew up in a completely different culture, it has this unique personality, this wonderfully descriptive language that really captures the emotional roller coaster of the charts.
This slide shows it perfectly. In the West, technicians talk about filling the gap on a chart. It sounds, well, pretty mechanical. But the Japanese expression is closing the window. See the difference? It's more poetic. It implies an opportunity that has been slammed shut. It adds this whole other layer to how you see the chart.
So this was a pretty bold prediction back when candlesticks first came to the West. And you know what? It pretty much came true. The amount of information, the instant visual story they tell, honestly, once you get used to candlesticks, the old bar charts just feel kind of empty.
So, okay, this is all fascinating history, but how does this 300-year-old wisdom actually help us today, staring at our screens? What's the real takeaway for a trader right now?
And this right here is the most important part. Those simple definitions we started with, they're just the entry fee. The real magic, the real skill comes from understanding the nuances, the context, the little details, the specific rules that actually give these patterns their predictive power.
Okay, let's circle back to that engulfing pattern.
For it to be a real, high-probability signal, it's not enough to just see one big candle. No, there are rules. First, you need a clear trend already in place. Second, the body of that second candle, not the wicks, the body, has to swallow the first one. And third, the two candles have to be opposite colors. These details matter a lot. They're the difference between a random blip and a meaningful signal.
And all of this leads to maybe the biggest secret of all. It's an art. It's not a rigid science with mathematical laws. You're not looking for some infallible magic signal that works every time. What you're doing is learning a language, the language of human emotion playing out on a massive scale. Your job is to simply interpret the story the market is telling you.
So the next time you pull up a chart, I want you to look closer. Don't just see a bunch of red and green bars. See the battle. See the fear and the hope and the greed. See the ghost of a Japanese rice trader from 3 centuries ago. Because you're not just looking at data points, you're reading a story.